Hey everybody, welcome back to Swing Trading. My name is Mike Fairborn. It's great to be with you today. We've got several people out here in the chat just taking a look. And if you are new, let us know for sure. I do recognize many of your names, so it's great to welcome back our vets into our group as always. But folks, today we're going to be looking at swing trading and talking about specifically what we talk about each and every week, trying to find and pinpoint the way traders might look at narrowing down those time frames right before a run occurs on the chart. So really like a 3 to 14 day up to maybe a month's time frame move, really trying to piece a lot of different categories and indications together that traders might be looking at to help them build an expectation about a continuation of a run. So that's what we'll look at. If you're not familiar with swing trading, that's what it is. We'll break it down into more details for you here momentarily. I want to jump into that though, but did want to welcome all in here. Good to have you folks. We do have Cameron May in the chat with me, good friend and colleague of mine. Folks, you can follow us both on X, and Cam has posted in our X handles, Cameron May CS, Mike Fairborn CS, where we do post financial related content as well as other things too, such as bike rides, sunsets, whatever the case might be. So good to have you on board, folks. Let's do this. Let's dive into our disclosures so we can get going right away here. Got plenty to share with you today. Information here is for general information purposes only and should not be considered an individualized recommendation. Now, options carry a high level of risk. They're not suitable for all investors. Short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early. The short put risks purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. The paper money software application, which we'll be utilizing today, that is for educational purposes only. Investing does involve risk, including the loss of principal. There's no guarantee that the execution of a stop order will be at or near the stop price, and past performance is no guarantee of future results. Now, as we do look at it within this class frequently, some of the companies we'll look at, and there are some today, those companies do, they pay dividends, but dividends are not guaranteed. They can be cut at any time. Now, there is a look at some futures disclosures that we don't trade futures in this class, but sometimes we will reference those charts only. All right. Well, let's get going. I did want to just kind of highlight a couple of details just because we do have so many new people in our class today. I want to just kind of break down here, make sure we're on the same page so you can kind of visually see an example. And actually, we're going to hit several examples today, live examples within this class of scenarios and setups that might be similar to what you're seeing right here. But this is what we're kind of looking at when I mentioned that swing trade time frame that we look for specifically within this class. So this is known as a bull flag. It's something that we also have within this class. I mean, we talk about price patterns. This is one of the main key price patterns that we'll focus in on. Here is the bull flag right there. You could probably see it sticking out, but just in case you can't, there's the upward move. Here is that consolidation, as you can see, coming down, and notice it looks a little bit like a flag, and that's where the term comes from. I say a little bit like a flag. It's just kind of the outline of the flag, but these are noted for, notice what it is. The possibility, maybe a higher likelihood of a follow through of that trend to the upside. Notice what we're seeing here. We're seeing a strong move to the upside, which is a continuation of the trend. The trend needs to be bullish. That's the first thing we look for. There's your high to the upside here. Here is your pullback. We did make a new high, and now what we're doing is consolidating. When stocks trend higher, in many cases, they will make these sort of ebbs and flows, and I know you guys have seen this. You probably can visualize 100 of them in your mind right now. When we're trending higher, we get a lot of times these sorts of moves. And what we're really just isolating here is just this pattern right here. Oh, just redraw that a little bit. There we go. This pattern right there, and that is basically what we're saying here. That is the flag pattern, noted for a strong move to the upside and a very mild pullback to the downside. Okay, so we'll use market indications. A lot of traders too. I mean, they'll add in different indicators. I did want to, this class is pretty heavy on indicators too. Those price indicators could be really, really helpful in trying to help us spot kind of some of the initial strength, but then also the consolidation in price as well. So we're going to be looking at that. Now, these are short-term days to weeks normally, and I did say, weeks, a lot of times it's 3 days to, roughly 14, 3 to 14 days up to maybe 1 month at the most. And that's if you're really happy holding that trend. And that's just kind of like a shorter term time frame. But generally, it's within this time frame. But there are some folks that do look for a little bit longer term time frames, like up to a month, even on a swing trade, especially if the stock's had a history of kind of making these types of moves. Now, the one thing too I wanted to state is that we can also see a downward move too. And as we're seeing kind of moves in the market right now that are broken down, traders might look for what's referred to as a bear flag. Now, the key distinguishing factor here, though, folks, it does come down to the trend, because you can kind of spot like what might look like we just saw over here. This sort of looks like a bull flag right there. If we don't see what's going on over here, that's sort of a bull flag. But what is the direction of the trend? That is down, down, and down, down, down. We don't have that in the market right now. We've been really up towards some highs, right? And you can see that kind of pullback occurring right through here. It's making lower lows and lower highs. So I just want to highlight the trend. That's how we distinguish a lot of the bullish versus bearish price patterns. The trend plays a key role, because you can always just kind of cherry pick it and say, gosh, I think that's a bull flag right there. Well, a lot of cases, traders, will look at an expectation of a trend continuing until the trend changes. And when that trend is down or when the trend is up, there's either the expectation of a trend going higher, or in this case, with the bear flag, a trend going lower. But the construction is really the same. Sharp downward move here, followed by an upside move. Okay, so what we've been seeing, though, in the market recently is a lot of strength, right? We've seen a lot of bull flags. In fact, let's just do this right now. I'm going to go ahead and share. We'll get this pulled up full screen so we can just take a look here. In fact, here is the S&P 500 index, folks. And you can see right here, there have been, just looking at the general market, there's even been in the market, right, a series of higher highs and higher lows. And you can kind of pinpoint maybe some of those stronger moves right there. Now, we've run up to this point. Do we have a downtrend yet? One day actually does not make a downtrend. Although I used to think it did. When I was initially trading, I'd say, gosh, we're going down. We're going down. And, I failed to kind of see the forest through the trees here. And that is a really strong upward move. We don't have a lower low and lower high yet. So we don't really have a ton of necessarily bear flags setting up at this point in time. We're just still seeing strength. But the one thing I want to say, and a lot of individuals that have been here for a while have noted, that we do kind of reference the market. We want to see, is there risk on, risk on? In other words, are we seeing, generally speaking, the market's going higher here, and a risk on where traders might come in and buy positions in the S&P 500 or other stocks, or just in the market in general? Or is it risk off, lower lows and lower highs? In other words, a change in that trend coming down. Okay, so just a key point here, because I know many of you are new, just want to make sure you understand that concept. Now, when the market is up, it's really conducive to a lot of bull flags, and we've seen quite a few in this class. Let me just highlight a couple that we've been looking at previously. I mean, here's one over the past couple of weeks. Do you see this flag pattern here? This is sort of in a discretionary group, gambling, right? It is discretionary. You got to have additional funds in a lot of cases to gamble. There is that flag pattern. And our focus in this class is just, in many cases, identifying the trend, identifying the strength, but really down here. What are we seeing down here? What indicators are showing us indications of the possibility of a follow through to the upside? And there you have it again. Look at this, a sideways move, and we follow through. Now, we are down, like so many stocks are down today on the market. A heat map will show you that, right? It's just flat out red everywhere. But what we're seeing here is some trends that have been going up, and the markets have kind of helped that a bit, right, to a degree. We've also looked at, like, let's say, for example, if I just draw out here now, another sort of, well, in this case, it's a contract. It's a gold contract. Gold's been going higher, and that's been outside of the market, right? These aren't stocks. This is just the commodity of gold itself. But you can see higher highs and higher lows over here. And we just recently talked about a sideways channel over here. And what did we do? Well, in this class, we did put on some trades that were within the gold miners because the trend is up, it's showing strength. And gold itself, just like commodities, like these precious metals, they're kind of outside of these government monetary sort of setups or scenarios, or just the monetary system itself. Gold doesn't really respond. It can respond to weakness in those areas, but we've seen that strength. Let me just show you. So this is a look at one of the companies here that we've recently been in. This is AEM, Agnico Eagle Mines. And last week we took off half of our position here. We only had 100 shares on this stock, but can you guys see how this too had been responding to the price of gold going higher? You can see over here pretty clearly, higher highs, higher lows, really some sharp moves over here too, and really some mild consolidations. This is an example of one over here. We put on a trade, and each one of these could have like a target to the upside. And that's why we use some of these price patterns as well. Okay, this one did hit its price target. We're looking at the swing trades on those targets. This is how the bull flag gives us a projection of where the price might be. A very, very important concept when we're dealing with price patterns is that they can give us the potential for a price pattern to be reached. And all we're simply doing here is we're taking the range of the run to the upside, and we're just adding that same price range to the lower end. And I just kind of tried to eyeball it here, but there you go, folks, up to the upper end here, and that would be a potential target. Now, in this class, we call that a target 2, a T2 target. That's the full projection of a bull flag. It's simply just the move up, this range right here, and we're just looking at a rally up to this point, and that is what we do a lot in this class because these trends are really in line with the trend of the underlying stock and these price patterns. And so you can just get projected price moves coming to the upside. That is a T2 target. A T1 target is just up towards the prior high. So that's T1, and that's a T2. We've had other classes where we talk more in detail on this topic, but just to give you a general idea, that's what we look at. It's such a critically important part of price patterns because it can give you upside moves. Now, what we elected to do with this particular trade last week is because what we did hit is this price pattern. In fact, this was our move to the upside, and we added that down here, and we actually reached our point right there last week. So what we did is we took half off the table. We threw a poll out into the chat, and we just said, we got 100 shares on this guy. What do you guys want to do? Do we sell it all? Do we sell half, or do we just keep it on? Because it's showing so much strength with gold. So what we elected to do was we just took half off the table. So we've only got 50 shares on here. This is how this trade's doing in paper money right now. So it's still up about $1,400 just on 50 shares right now. It would have been up maybe double that, a little bit more than double that, maybe about 3,000, just off a move off here with just 100 shares and letting it kind of do its thing, just letting it go, you know. But we do look at potential exit points as well. Now, for this particular one, an exit point that we'd looked at for the possibility of exiting, somewhere near a potential exit point would simply be, there it is, a simple moving average. And we were looking at a 10, we were looking at a 20, which is about representative about a 1 month time frame. Here is our, I'm going to go ahead and just throw this on the chart right now. You'll notice that we bounced off this level, and lo and behold, we bounced off the prior high. And we kind of came close to this prior high as we came to this high. In other words, stocks might also staircase to the upside before they come back down. What we said with this one, though, with the remaining 50 shares, we're going to let it run, and then if prices break below that 20 period or whatever moving average we wanted to use. You know, this is just an example on an example trade, but that is a 20, folks, that's a DMA, 20-day moving average. You'll notice what it does. It just puts the average of the prior 20 days in there. If we break below that level, yeah, it can signal consolidation. This has been a tricky one because we've bounced up above it every time. The trend's been so strong, but you can see right there, you break below it, you're out of that trade until you get back into it or until another bull flag sort of forms there, okay? By the way, as it's getting really strong, there are other ways we've done this. One thing I mentioned in this class that if it's really breakout move, it's moving really quite fast. I'm going to flip this guy into a 10 period moving average. Let's click OK there. And voila, look how much tighter this is. So what this could potentially do, because we already have the gain and we want to hold that gain, all else equal, maybe if prices still continue up and then break down here, look where we're getting out at. Maybe somewhere closer to 150, which is a big round number as well. Sometimes that's where prices go, around these big round numbers. But you can look in this group and you can see that driver from something like gold really pushing prices higher. Look at NEM. This is Newmont Mining. NEM breaking higher. You can see a lot of price movement can occur when prices are above that 10-day moving average. So just letting you know some of the tools and some of the techniques that traders will use, and we discuss those in this class. By the way, there is an ETF out there too that some traders will go into. We don't talk about it in this class, but there is one for the gold miners out there. Let's just show one more before we're done. This is Barrick Mining. Really an explosive move. Okay, let's stop for a second because I really want you guys to see this, because the next stock I look at here is one that looks similar to this in terms of the swing trade, a pattern that we regularly will recognize in this class. It's one of the stronger ones because it breaks above resistance and it simply holds there, consolidates. There might be accumulation of shares, and then prices do what? Boom, they take off higher. Now, they don't have to, but these are some of the things that traders will look for. It can help to boost their expectations. Here we are on that Barrick Mining. We looked at this stock briefly. We chose AEM when we looked at this, but if you take a look at it here, I would call that price resistance. All the way to the left-hand side, moving over to the middle, and let me just go ahead and continue off to the right there. Would you say that's price resistance, folks? We took it out right there. That was a breakout right there. That's a breakout. That's a long word. B for short. Breakout. And what did we do? We consolidated. Do you recognize that pattern? Now, there are other patterns out there for sure, but that held it. It's not even called, sometimes they don't even call this a bull flag. It's a bull flat because it's so flat. It holds all that price action. In other words, you might be getting accumulation of shares. And as I highlight this guy, higher low, higher low, higher low, boom. You see the breakout? This is a little cool trick. Bottom right-hand corner of the screen, if you want to track these price projections, go down here into the bottom. There's a little drawing tool you can see just at the bottom end of my screen right here. I'll just point to it. Many of you don't know where I'm at, but it's right on Thinkorswim. You got to be on charts. I happen to have a diagonal line up right now, but what I'm going to do is I'm going to click on that box. I'm going to go to the right of the percent, which is the Fibonacci retrace. I'm going to go to the extensions. Now, if I wanted to get a more exact read, I could click one time, click again, and then pull it back to the low before we bounced off. And look at that. Did we hit our 100%? Right there. Some people, by the way, will draw off this low. Some will do it off the low before the high. Either way, folks, we met our T2 target. Well, we didn't meet it, but this stock met that T2 target right there at that 100. I'm going to go ahead and just start it so you can see, because that's where a lot of traders will trade too. We did something very, very similar on AEM, right? Maybe it didn't set up quite as long, but it was a flag pattern nonetheless. It's still in this range. So just letting you know, it might be a whole host of stocks that might be flagging and moving. Now down here, an indicator that we talked about last week in pretty interesting detail. We talked about money flow and volume in general. But you'll notice over here, the money flow, which helps to track accumulation of volume, it's actually going up as prices are really going flat. Now, all else equal, that could be construed as a positive. What do we have on RSI? There's that big number we talk about here, holding at 50. That's a potent area that a lot of traders will look for. It can hold at 50, even on a consolidation, quite strong. Normally, we say at least hold by 40. But there you go, a couple of these that we'll look at, and that really ran up quite well, actually, all things considered. Now, I wanted to highlight this because that class and other classes, if you want to go ahead and take a look at some of the other topics we've discussed, you can go into our Trader Talks, and I would encourage you, if you're not already, within this group, definitely go to Trader Talks. We'd love to have you subscribe. In fact, you can come over here too and take a look at our playlists. You got some good playlists here. I'm going to go ahead and just click on this swing trading playlist just so you have it. I'll post that in the chat here for you. What we talked about last week is we actually talked about, we did bring up money flow, but we looked at kind of combining some of the indicators with news. And that leads right into our next stock that we talked about last week, which is Apple. But let me go ahead and actually, we got the playlist there. You can take a look at any of these. I'll throw this into the chat so you got it. And here it is. If there's one that catches your interest, but that is it right there. That's the link. And I'll go ahead and just include this one as well, just so you do have it in here as well, where we talked about news. That was a totally different aspect, but news can be really interesting, particularly as you're setting up possibly in a flag pattern or another sort of price pattern or something that indicators are suggesting could be strong as well. So this is the swing trade class itself. Okay. And that should be a different link, I hope. I tried. Okay, so let's just see on that. So there you go. I want to throw that out there to you, as you can kind of see that right there. So let's take a look into the next stock, and we'll just look at a couple of these now. But I wanted to highlight what's going on so you understand it. This is one on Apple. Now, Apple did dip lower here. Surprise, surprise, right? The market sold off pretty big today, and we have Apple dipping in here. But on the 9th of September, they do have, I don't know if they still call it Apple Days, but they have that, it's a media type day where they talk about their new products and stuff, and that has been interesting. And you notice that that sits in right around this range over here, kind of where somebody might anticipate the possibility of a flag pattern possibly moving up here. Well, anyways, that was our trade. It dipped down on this a little bit, but you can see we have a stop level set here. Now, the stop level does not guarantee an exit right at that price, but it does trigger a sell into the system, which goes to compete with other existing market orders out there. It does help too if you have a liquid stock, which Apple is. But there you have it as well. So we have this in place, potentially looking for a target up top, a T2 target. This is a OCO bracket order. One cancels the other. So if one of these guys triggers, that is an OCO. The other one cancels the other. So either our target gets hit or a potential exit level gets hit as well. But we talked about that as well. It's kind of fascinating because you will see in many cases, well, not in many cases, but when it does come up, it can be interesting. And that is when prices run into a range where there is a news event coming that has historically been positive at times. All right, well, in this class too, we'll spend more time talking about big picture drivers out there. In fact, let's go over here. Actually, I've got it pulled up right down below. And I brought this up last week. I sent a little X tweet out on this as well, or a post. And you can see up top here, these are all 11 sectors in the S&P 500 and how they've been responding relative to the S&P 500. So this is a relative strength indicator. It weighs how the sectors are performing relative to the S&P 500. And this can really be quite helpful because there is an expectation of interest rate cuts. I think there's 2 this year that are expected, September and maybe another one later this year. Some expect different, cuts, but some are expecting 2 cuts this year. But over that time frame, what I highlighted here is look how some of these sectors have been responding. And remember, these are all sectors in the S&P 500, so they have stocks that are within them that are all within the S&P 500. In fact, if I put a big circle around this whole thing, you're going to just capture all S&P 500 stocks. We've just broken them down into specific sectors here, and I just wanted to show you that some of these have been over this interest rate cut expectation. Look how they've been performing relative to the S&P. Materials. Folks, you know what falls in there? You know what caught my attention? Sectors. That's where I went to the gold. Precious metals is right smack dab into materials. And you can spot this big picture. I'll share this grid with you as well so you have it. But this is just using relative strength. In fact, let me just do this real quick. I know I'm throwing a lot at you guys, but I do want you to have some of these tools that are so helpful. In fact, let's just maximize this guy real quick. We talk about each and every week because we will look at different drivers each week, but you can see up top here that this one, relative strength, SPX, it just simply takes a look at the SPX relative to its sector and gives, or relative to whatever you want to measure it against, and it will show you, hey, is the sector strengthening or weakening relative to the broader market? And that's how you can pick up on rotation in a number of cases. Rotation, sector, think about it, sector rotation. Materials, financials have been strong. Look at this, discretionary. I showed you guys Win earlier, right? We did a trade on CCL, which is Carnival Cruise Line, another sort of discretionary, consumer discretionary item. Look at some of these moves. And look at this one down here, healthcare, energy. So really, I tried to kind of pivot this or show you the top 4 here that we're moving. This can be really helpful. Let's go ahead and just share this grid right now so you've got it. This is not a ThinkScript, but it's just charts. It's just charts itself. So I'll throw that in to the chat for you guys anyway, so you have it. Sector rotation. We'll look at this as well as a whole host of other sorts of indicators, long-term as well, macro charts, if you will, when they do come up. ThinkScripts, by the way, they're not guaranteed for timeliness or accuracy, but this was not. This was just grid chart only. A quick note, because we did have a position on CCL. CCL did dip a little bit. You can see where the target on this guy might be. Kind of recovered a little bit from our lows, but there is the sideways pattern. We'll see if that does continue to unfold here. Okay, now let's dive in to some of the scenarios and setups this week. Let's look at, this is in the discretionary field. EL, Estee Lauder. Interesting, it had been down for a while, but more recently showing some strength. You could say it's towards the bottom, but actually we've broken above some highs right over here. You see that? It looks similar to some of these other trades we've been focusing on previously, right? There are some similarities in that we've broken this high, and then what have we done? We've gone flat. Basically, we've gone sideways here. Now, looking down here, I'm going to really zoom in so you guys can see this a little bit better with me here too. But if you look over here, you could say that, you know, we did have what's referred to as a hold, kind of maybe an entry point that some traders will look at. That is a close above the high of the low day. So folks, within a consolidation move, there is a low point potentially within that consolidation. Here's the acronym: close above the high of the low day, hold. Okay, I was saying it wrong. I used to say hold, and then I got sharply corrected in the chat. It's hold, right? It's not an actual word you'll find in the dictionary, but people like to say hold. There you go, hold. Close above. You see how we closed above on this bar? The high of the low day. That's our low day in this whole consolidation. And that was the first time we closed above the high of that low day in terms of really pulling back towards maybe a support. We already got an entry there. Now, some traders will look at this because that can mean the beginning of an entry point. I can, you know, they'll look at for that reason. That's a hold right there. That's a hold right there. That's one there. It's a huge one, but it's one nonetheless. That's a hold right there. Do you see? It gives you a little bit of confirmation right there as well. And believe it or not, it looks like, right there. You're breaking above the first level of resistance. So another key. Normally in this class, we just look at a lot of example trades. In fact, last week, I think we did 6 or something, but I realize we just have a larger group of people that are seeing this for the first time. So I wanted to give you guys some of the techniques that we cover, right, in this class. Now, because we don't have a hold right here, we're kind of pulling back a little bit. What some traders will utilize here is they will say, well, Mike, that's all great, but we're still going to a sideways range. Well, exactly. I would say you're right. We're holding above this level, but why do we want to wait? You know, maybe it comes down here and you get a bounce off that level, and that's of interest, right? Some traders will say that's an interest, but if it goes kind of a longer sideways range, why not just wait for it to kind of confirm a breakout here? Breaking above some highs. So to do that, let's tap into, I'm going to right click right there. There we go. Let's right click. I'm going to say, hey, if I close above this range, notify me. Right click, create an alert right here. Okay. And I'm just going to say breakout, question mark. Now we're using these awesome tools on the Thinkorswim platform, folks, to help us really understand when prices are breaking higher, at least give us an indication that we broke above that level. You know, we don't know if it's going to continue, but it could be interesting because it's a sideways channel. It looks like a longer term bull flag. I know it's longer term, but sometimes these moves can be quick when they break. And so just let us know. I realize that it's a longer cycle kind of a trade here. But if that's the case, you know, right click, set those up. And by the way, if you wanted that to be emailed to you, or texted to you, which is what I use, is really the text messaging. You can go over here into setup and applications, go to notifications, and then just go to email or throw in your text message there. I get those in about 3 to 5 seconds, those text messages, even though that alert's been sitting out there on the top of a bull flag for a couple years. I've had that happen 2+ years. I'll still get notified in about 3 to 5 seconds normally. Maybe some of you do use email though, and so I want to throw that out there too. That is an option as well. And of course, you know, you can have the computer make a sound too, of course. So there's a lot of different considerations here as you look at this, right? Okay, so that's of interest. You can kind of see that sideways range over here that's setting up. These are really fascinating too, because how did I find this? One of the things we talk about in this class is we used over here another indicator. Now this indicator over here is it's the TTM squeeze. And what that shows is an area where we have, and I'll put it on right there. There we go. Let me take these other ones off just so it's not too, just close them out for a second. There we go. It's not too busy. And you can see what's happening over here. Notice we're into a red range. Folks, this is really tied into consolidation. And what this means is that the Bollinger Band, if you use that, it's an indication the Bollinger Band, if it gets weak, and specifically if the Bollinger Band goes below the Keltner channel, it uses 2 indicators, does this TTM squeeze. The Bollinger Band below the Keltner channel, it can signify an extra tight range over here on a given stock. Okay, in other words, what we're seeing over here, it's just range bound, so much so that even the Bollinger Band's below the Keltner channel. And that might mean, we talked about that in one of the classes that I'd shared previously, but I just want to park that in the back of your mind. And that's why it's turning red. Now, generally what this means, what traders will look for, is an explosive move outside of that range. Now, does it happen every time? No, but it will turn green again when it does. And this is one of those that is going into a sideways channel. It's a great way to help find these sideways patterns, these flag patterns, if you will. Okay, so keep that in mind. We've got that one set up. Let's look at a shorter term kind of a scenario set up that might also be kind of flagging. And you'll also notice too, oh, do you see it? Can you guys see it? I just want to give you a second. Do you see that? A strong move here followed by a consolidation. I'm talking current here. Where are we at right now? Oh, yeah. I just saw that in the chat. Let me throw that on so you can see it. Watch this. So let's put the Bollinger Band on right now. Bollinger Band, just to highlight this because I did bring it up. Bollinger Band and the Keltner channel right here. We added just both of these in on price. And they're going to show on price here. And what I'll show you, we'll use this as an example, okay? But this is Keltner channels are in this range. That's I'll zoom in. I caught that in the chat, so I do want to respond though. Let's go ahead and just zoom in right now so you can really see this more clear. So the Bollinger Band sits on the outside. It's a measure, using standard deviations of the movement of the stock itself. Now, do you notice over here, this is our Keltner, K for short, Keltner. And then also down here, here's our Keltner on the bottom. We have a mid-range Keltner that measures just our sort of a moving average. These are Keltners. The other two are Bollinger Bands. And if you look real close, you'll see, I'll use yellow here. Do you see how we dipped below right there? And we dipped above right there? In other words, the Bollinger Band snuck in between those Keltner channels. And what do you see down below? It flipped. Okay. Now, it doesn't mean it's going to flag, but it is fascinating because it ties in together with that sideways channel. And it says, hey, we're tightening up here, and there could be, bam, an explosion here. Now, does that coincide with the possibility of a flag pattern going up? Do you see where we're trying to highlight the explosive move if it does unfold? Because right now this is actually more of a flat, but we're looking at this. We're using indicators now on top of this to kind of help us get a sense that maybe there is a flag pattern setting up because the trend's there, the pattern's there, and now we've got another indicator. Now look over here, Al, and everybody else. Look at this. This one went for a series of days, and when you get into a tight range, you coil up. Traders are expecting a move. Now, there wasn't really a flag pattern down here, but when it came off, it said, hey, be mindful of this. Be mindful of this. Watch it close. It came off, and you see prices extend? Now we're putting it in the price pattern. So if I come up here, and let me clear those out, because I did want to show it, but let's take those off for now, since we've seen it. And I'm just going to scoot this guy on down, dip that y-axis, and I'm going to go over here and just point out to you, there is your pull of the flag. Here's the flag itself. And if we were to take this range here, right off the bottom, and I'm just going to add in this price move here, right, in price. And it's roughly, yeah, about 3 up. 1, 2, it's somewhere over here. I'm just eyeballing it. But now, not only are we watching this, but it's also saying, hey, it's showing us that it's tightening up. It is coiling within the trend, within the pattern itself. This company does fit into auto parts, and this group has actually been quite strong as well. I think that falls right into discretionary, to be honest with you, too, which is one of the sectors that was moving as well. All right. So there you have it. Now, this would be a fascinating one to look for a breakout on as well. I could go ahead and just right click over here and put that in. Now it's coming down. Let me just do this. I'm just going to put a trade on right now, an example trade, because we don't always have the perfect window to put this in here. But I think a lot of traders might be waiting for a breakout or maybe a bounce off a prior support level. But just an example trade, let's put it on. Let's just do 50 shares. And if it takes out the high, we'll do another 50 shares. Okay. That's how we'll trade this. So I'm going to go ahead and click on trade. By the way, this stock, I was so used to this being like in the 500s or thousands, which it was, but they had a 15-to-1, I think, reverse or stock split. I'm sorry, not reverse split, a 15-to-1 stock split. Now I'm going to right click over here. Let's go down to buy custom with OCL bracket. There it is again. One cancels the other bracket, and we'll put that in there. Now I'm going to put this as a good tail cancel and another good tail cancel. I'm going to flip this guy actually into a market order just to get it under our belt here. Let's set this up. So I've linked it. So if I put in 50 shares over here and tab through, we've got a 50 and a 50. Now I'm going to put this, watch how I do this. I want to set this up a little higher, 107, and I'll set this down about 100, but I'll show you where we might want to put that potential exit out in the form of the stop. Confirm and send. Let's look at it over here just to confirm and verify our order before we put it in. Margin requirement right there, about 20. It's a cheaper stock than it used to be, but we're just using a little bit of money management potentially, right? Maybe starting with half a position. And there you go. Now, our target, as we said, could be approximately a little bit higher. And there's 1, 2. Yeah. So if that's off the bottom, somewhere maybe over here. I'm just holding it and dragging it on up. So that could potentially be a target. Now, I don't have that exactly measured, folks, but maybe I'm a little bit off. Maybe it could go up, maybe one more, a little bit higher. But anyways, I just want to show you an example of it here. Now, for our exit point, what I'm going to do is just put that, and I think I set it up close to about right, but that is simply just below the low of the trading range. Do you see it? So that for risk, potential risk, that is, if we get out near the stop, right? That would be our potential risk if we get in here. But what about the reward if it does go to the T1 target? Well, it's a little bit higher, isn't it? The reward side in blue that I've got is bigger than that risk. And by the way, the risk I put it, maybe it's closer to this level. So maybe it's a little bit smaller box and maybe the reward is somewhere in there. But that's something that we can consider as we go through it. Now, I'll talk about these within some of the classes that I do teach, as I mentioned, and also wanted to mention too. This is an interesting time of the year where, seasonally speaking, it's important to be mindful of potential downward moves in the market. In fact, I'll send that kind of information out to you. I'm just going to show you this real quick. This is just my X post here. I just said, hey, remember market seasonality for September. It doesn't have to do this, but on average, this is what happens. This is on a 10-year time frame. We tend to go down. And by the way, it's not disappointing us today starting out. We'll see how the rest of the month goes, but it's not really disappointing us. It's going down. We got to be mindful of that. You see even Apple going down and others too. It's a difficult time of the year for some of these flag patterns. We're not quite in a position for a lot of bear flags because the trends have been so strong in the S&P. But it can be helpful to kind of be mindful of the time frame as well. And I post this. These are some of the posts that I will put in X for you guys, so that you're aware of it and you can track this stuff as it comes out. Just big picture, sort of macro perspectives that may or may not influence the market. I'll go ahead and just post this in right now. That is my X handle. Love to have you follow us again. You can click on that and follow us. Be sure to follow Cameron Macias as well, folks. Hope you found this informative and useful, folks. If you did get value out of this, love to see it each and every week. We'll go through a number more examples next week. Today, I wanted to really make sure you guys understood a little bit more what this class is all about, teaching those concepts, getting that down. Yeah, if you found value, smash that like button. It really lets me know that this is something that resonates with you. You like the approach and our discussion here today. So with that, I think we're all set. There was a survey link that was sent out. Thank you, Cam, for reposting that. If you click on that survey link, I think there's only 2 questions there, but I'll go through, 10 if you loved it, 1 if you hated it, whatever the case might be. Folks, my manager and myself, we'll look at those. I'll read every one of those comments and appreciate, the feedback in the chat. And it was great being with you all today. Thanks again, Cam, so much for your help. Folks, look forward to future discussions with you. And have a great rest of the day.